The Federal Reserve has paused raising rates this month. And what does this mean for home buyers and homeowners and home sellers? For the first time in 15 months after raising rates 10 times in a row, the FOMC, the Federal Reserve Open Market Committee, voted to pause its rate hikes to the short-term interest rate. In case you didn't know, the rate hikes are designed to cool inflation in the U.S. economy. When the Fed hikes rates, it makes money more expensive. Businesses and people borrow less money and they spend less money and the economy slows down. Though not directly affected by the Fed funds rate, mortgage rates have skyrocketed, slowing the housing market to a near crawl. Home buyers can now only buy about 70% of the house they could have bought a couple of years ago. Homeowners are locked into the home they own now because to buy now they go from a 3.5% to 5% loan to 6 to 7% loan. They're not moving, not if they don't have to. Home sellers are seeing prices drop in a big way because the number of buyers has dropped off a cliff. U.S. home sales have tanked. It would be hard to find an industry more affected by the rate hikes than housing. That's why this week's rate pause by Powell and the 12 board members, it really is such a big deal. So why now? Why wait? The pause gives the Fed time to gather more data and better evaluate the economy's response. It seems they have confidence the rate hikes are working, and they're waiting to see the full effect. No one expects the rate pause to continue. In fact, the Fed has indicated that there may be 2 more rate increases in the near future, but this pause does give us one thing that is sorely needed: hope. Hope that we're closer to getting a handle on inflation. In May, the inflation rate was 4%. That's much better than the recent numbers, but still a long way from the 2% target. It's also the first month in 2 years that wage growth outpaced the CPI, the Consumer Price Index, meaning our average standard of living got a little bit better. Though most of us probably didn't feel it in our wallets, it's nice to hear. Again, another signal of hope. Lawrence Yun, chief economist for NAR, the National Association of Realtors, says that the coming rate hikes are unwarranted and that the Fed may need to start lowering rates soon. Wouldn't that be something? We've all seen how there's a pretty serious lag time between the Fed rate changes and the response in the U.S. economy. The U.S. economy is an immense vessel, and it takes massive effort to change course. Yoon's point is that if the Fed sees they have overshot the mark to make the 2% inflation rate, it's already too late and we'll dip into recession. Keep in mind the other obvious signs that things may have cooled off a bit much. Although it seems contained at this point, there's been 3 bank failures in the U.S. To be fair, it seems mismanagement is to blame more than rates, but it does expose the delicate balance of the economic world. Mortgage rates are more closely tied to the 10-year Treasury bonds, and they responded to the better inflation news with a rate decline to 3.7%. Yoon says that normally means a 30-year mortgage rate of 5.5% to 5.7%, though rates have been hovering around 7%. This means there's a real chance for lowering rates as the year progresses. That would be awesome. The Fed's decision to hold off on raising rates in June means mortgage rates will likely stay largely unchanged for the next couple of months. But the signal being sent and the message being received is that things are looking better. Make no mistake, the Fed is focused on containing inflation and won't be shy about hiking rates again if it's needed. The takeaway on all this seems to be the roller coaster ride that was the last couple of years appears to be winding down. However, that doesn't mean it's come to an end. Where we are now is where we will be for a while, and though that's not best news, the fact is the Fed sees enough improvement to pause and watch the economy instead of killing it off. This is welcome news indeed. If you're thinking of moving to this area in the near future, I hope you'll reach out. All the details are in the description box below. I'd love to chat with you. If you like this video, tell a friend, then subscribe and hit the bell so you'll be the first to learn more about the ever-changing housing market conditions. As always, I appreciate you and your time. Talk to you soon.